Hello, this is Craig Larson with Larson Financial Advisors for the market message on November 4th, 2014. Well, a lot has happened over the last week, and you probably heard by now that the Federal Reserve Bank here in the U.S. has concluded their quantitative easing program, and they are now buying $0 of government bonds every month. And just several hours after that announcement, the Bank of Japan boosted their quantitative easing program by quite a bit, sending the yen into a tailspin versus the dollar, and greatly benefiting those of us that were short the yen. So these currency changes can present some great opportunities for investors. Now, why would Japan do that? In essence, they're trying to boost their economy, and as they devalue their currency like that, it makes their goods more attractive. Whereas a Lexus and an Audi may have cost the same before that, now this is making the Lexus appear cheaper. So that should help the Japanese economy, at least in the short run, and probably irritate the Europeans quite a bit too at the same time. So there's opportunities for consumers, for currency investors in these times. Now, ultimately, Japan will be a real interesting thing to watch because I believe their economy is doomed at this point. They have not been having babies for the last 4 or 5 decades. They don't allow immigration. Their population is becoming very aged, and they just simply don't have enough people to keep an economy going strong. So look for a lot more interesting developments and opportunities in Japan, both of interest and of potential opportunity for investors. Now, moving on to the stock market, we just hit November 1st, which begins the seasonally strong half of the year, and we did a piece the last two May of 2014 and 2013 on seasonality, in that the vast majority of stock market performance happens during the November 1st through April 30th part of the year, and very little, almost none of the performance on the Dow and the S&P come from the May 1st through October 31st part of the year. So now we have a plus. Statistically, we're in the better half of the year now, and you probably noticed the sharp correction in stock markets in October. We had several really negative days. The S&P was down almost 10%, which is the most it's dropped for about 2.5 years. And then we had a very sharp bounce back. That bounce back has been enough to put relative strength of small company and mid-company aggressive type funds kind of back on the map. So that is a very positive development when we see the small companies doing well relative to the big blue chippers. Now, U.S. stocks has been in the first place versus other broad categories now for 3 years. We just passed the 3-year anniversary. So relative to international, to commodities, to bonds and currencies, U.S. stocks is the best trending category still. Now, number 2 is international. What was interesting on this correction was the typical international fund fell farther in October, and the bounce back has been very tepid. And the trend score rankings on international categories are really weak compared to the U.S. So for those that want risk and growth, the U.S. stock market is definitely outgunning most of its international counterparts, both in terms of a trend score and performance. Now, it was also a little over 3 years ago that gold hit its peak in 2011, and commodities as an asset class and gold have been in last place now for over 2 years on those broad asset class rankings. And oil hit $77 a barrel today. Oil's been very weak from a technical standpoint, but good for us gasoline buyers and energy consumers out here. And then gold recently on its chart has broken through a level of support. So price had come down to a certain level several times over the last year or two, and it has now broken below that level, which is very bearish for gold. So right now the commodity space is not offering a lot of great opportunities for investors, but the U.S. stock market appears to be strong, at least for now, so that's all good news for us investors. Now, if you have any questions or specifics on your portfolio that you'd like to review, please give me a call or send me an email, and I'd be glad to chat with you about it. In the meantime, have a great week, and I look forward to talking with you again through video in another few weeks. Have a great day.